take it through our talking point, but talking currencies for you. Parry has been on the show for a couple of months now. I'll take you through what you need to know about the currencies market. So what are the various tools, market tools that you can use to help trade for traders, and also for those of you who want to know about the currencies market. And last week we started the pivot point market tool analysis, and today we're going to continue with that on the show. Michael Akinwale, one of those analysts with our Parry, is right here with me in the studio, taking us through what else we need to know about our pivot point market tools. Thank you, Michael. Good morning. Thank you for joining us on the market. Quickly, I'd like you to just do a recap of the pivot point market tool that we had last week.
I think following from the last week where we started Fibonacci, from Fibonacci we're looking at pivot points. There's a little bit of similarity between them. The only difference is that Fibonacci was taken from specific Fibonacci numbers, which are ratios, but the pivot points it's calculated from the previous day's price. So those calculations are used to get specific prices in the market where we expect price to have support or resistance at those levels. So that's basically what the pivot points are. So now when you're trading, you don't expect that price keeps going up or it keeps coming down. So basically what you're trying to do is that you're trying to know at what point price could turn. And that's what the pivot point works for. Basically, it's used mostly by day traders, who try to go into the market, pick several pips and come out. But at the same time, when you're putting your stop loss or you're putting your take profit, you want to have an idea how far price is going to go before it turns. And that's where the pivot point becomes really, really, really handy for a trader.
Talking about ways of using the pivot point now, which I think is the next point we need to talk about. How do you use it? Because if it's being used by day traders to look at the levels at which one is the peeps, like you mentioned, but how do you use it? Because you said it's actually different from Fibonacci levels. Sure, are quite similar.
Let me state before I expand on those points. Let me state the 3 points in which traders use it. Number one, they use it for range trading. Number two, they use it to also determine market sentiment, where price is going, whether it's going up there or it's going down. And it's also used for breakouts. Basically, when price moves to a level, it's either going to come down.
Just 1 minute. I hope we can have that on full screen for our viewers to just look at what ways you can use the Fibonacci, the pivot point levels. Okay, what are the ways traders use the pivot point for
trading, for breakouts, and also used to determine market sentiment. Let's take the first one, which is range trading. Basically, price moves in a range. Even though it's going in a trend, it's like, for instance, since Monday, USD has been in a range. And if you check the pivot of yesterday, I was doing that analysis of yesterday, I discovered that price was practically in that range throughout yesterday, in a particular range throughout yesterday. So basically, if you look at it, let's look at this current chart I'm looking
at. Range trading. Introducing range trading. Let's look at
price actually goes downwards, and it's at S1. S1 is support 1. It's one of the pivot point levels called support 1. Price gets to a support 1. What traders are expecting is that for rich traders, they expect that price is going to bounce at that support and go up. So basically what traders are going to do is that they're going to place a buy at that support and expect price to go to the next pivot level, which is the major pivot point, which is the one with tag PP. And if you look at what happened next, which is the next chart there, you can see that price actually bounced off that support and moved to the next point. So whoever placed a buy at that support and put the take profit at the next pivot, which is the major pivot point, will have made some profits. If you look at that arrow pointing upwards, it's just showing you how price moved from that range to that range. Now, if you are not a pivot point trader, you are totally blind to those points, and that's where it becomes relevant. It's like if you're not a pilot, you don't understand that pilots actually have those. They're not called pivots for those who fly. For pilots, I'm sure maybe it's what they call radars or something, but they have those levels where they know, okay, you don't fly more than this level, you don't fly at that speed, you don't fly. In the same way, as a trader, you can't afford to be blind. You must have an idea of those points in the price or in the market at which price will probably turn. So basically, that's what in range trading, you're expecting that price is going to bounce from one point to the other, in that range, and that's where the pivot points comes.
Okay, you mentioned the fact that this at the pivot point instrument, it could move from 1 point upward. What if it moves down? Is there any point at all where you see that not being able to stay on that level and it moves down?
Yeah, when you're trading, number one, when you're trading is not an 100% act. It's not like there's no instrument or tool that gives you 100% prediction of the market. It's not like it's guesswork, but it's what we call like a degree of probability, and that's the first point. The second point is that you're not using the pivot points alone to determine. If you look at that previous chart we're looking at where price bounced, if you look at it, price actually came downwards towards that level first. It now came back towards that level. Now, if you look at those 2 points, it becomes like what we call a double bottom. Price actually formed a double bottom at that level. That double bottom also suggests to traders that there is a support at that level. So beyond the pivot point, there's also a support. Price showing that price tested that level once, it went back, tested again. So it's showing that there is a strength at that support, which actually makes the price bounce at that level. So basically, we understand that price will actually go down and break that support. But at that time, there are several factors that is reinforcing the fact.
I was about to ask you that. Are there fundamentals for a trader to look out for to determine how a number will move or what will push it up or down?
Sure, because you're not making a decision based on pivot points alone. You're looking at the fundamentals, you're looking at chart patterns, you're looking at some other technical tools like moving averages or oscillators like MACD. So you're combining all those tools together to make your decision. You understand?
Okay.
Yeah.
For your clientele, I don't know how much or to what extent have you been able to use this to help boost trading for them?
Now, you see what we do as in our training aspect is that we don't try to force down any strategy on you, because trading has a lot to do with personality. Some people like using some tools, some people like using some tools. So what we do is that we give you a lot of tools. From those tools, you cannot choose the ones that suits you most. For instance, somebody say, "Oh, I like Fibonacci." Somebody say, "Oh, I prefer pivot points." Some people say, "Oh, I like to use the tool."
Will they achieve the same results when you use either of those tools for a particular? Perhaps you want to get to a certain point, and you say, "Okay, if I like a particular one, but that give me the same result."
The only result in this business is profit. So as long as they both at the end make profit, then they achieve the same result. Basically. So if you're not making profit, you have to just fine tune his tools. See, the issue is that when you're not making profit, the problem is not the tools. The problem is maybe you're not your capacity to interpret the tools correctly. Or the fact that you're neglecting some important information aside the current tools you're using. So basically, it's not like using different tools what actually makes a difference. It's your capacity to interpret and use those tools that makes all the difference.
So how would you compare pivot point and range trading? It sounds just one of those tools. That
because price moves in ranges. Price is always ranging. And so your capacity to know at what point it's going to bounce off before it goes to another range, then the pivot point becomes very handy to achieve that objective, which is key. If you check this trade, for instance, whoever was using the pivot point at this level, we have been very profitable. Let's look at the next points for breakout. You know what a breakout is? Price gets to support and it breaks out of that support, or it's at the resistance and it breaks out of that resistance. Pivot points also be used. If you check this chart we're looking at right now, you can see that at those levels where we have those blues. If you check, I have blues there and I have reds. At those points where you have those blues, you can see that price actually broke out. Because if you check the two first set of reds that I have over there, you can see that those are like resistance points. Price could not break those resistance points. But at the next blue,
is it the fell backward?
Yeah, it fell backward. You can see it keeps falling backwards. It went up to the next blue red again. It fell backward. Then it got to the blue. Then it was able to break out. That was the breakout point. Now, for traders who trade breakout, those have been an opportunity to actually break out of that level to go to the next pivot point. If you look at this chart clearly, you will see that at those pivot point level, we have the PP, which is the pivot point. Price actually was not at that PP at this time, but you have R1, R2, R3. You can see how price was moving from R1 to R2, from R2 to R3. You can see how it's breaking out of those levels, and at all those levels, price was encountering support and resistance. And which shows you that. Now, let me tell you what makes pivot point works. It's like a fulfilling prophecy. If we all believe it's going to rain, what are we going to do? We all go buy an umbrella. So what's going to happen to people who sell umbrella? They're going to sell. So you can predict as a business person that when it's rainy season, you're going to sell umbrellas. Why? Because we all go buy umbrellas.
Under normal circumstances.
Yeah, in the same way.
Sometimes, but in a way, sorry to cut in there, but sometimes when you see the clouds very dark and the next minute they're all clear again. So what do you do in that respect?
Well, how many times does that happen?
A number of times.
A number of times, but most of the time when that happens, it rains. That's what you're counting on. You're counting on that probability that it happens most of the time. So in the same way, what I'm saying is that because a lot of traders use these pivot points and they take their profits and they set their stop losses at those levels, price will always react to those pivot points.
Still talking about the pivot points, how do you use it for breakout trading?
Okay, let's look at the next chart, because I have a very practical example here on practical direct implementation of the pivot points, where you put your stop losses, where you expect a breakout. If you look at this next chart, let's look at it on full screen.
Okay, the breakout trading graph
trading. If you look at, you have R1, R2 and R3 over there. If you see that when we had a breakout at R1, your stop loss would have been stop A. You can see where I have stop A over there.
Below the R1.
Yeah, because you expect that if price actually breaks out all of them, you can have your stop loss there. Now, why do you have your stop loss? Because you don't expect that it's going to happen all the time. And so when it doesn't happen, you want to cut your losses, short. So you have a stop loss.
Okay.
So you don't expect price to keep going in your favor all the time. So you have a stop loss. If you look at the second breakout also, when price broke out at R2, I had my stop loss B over there.
Okay.
Meaning that if price actually breaks out of that point, I want to, if it doesn't break out, I want to have my stop loss over there. And if you look at the third breakout on R3 also, I had my stop loss at C. So basically, when you trading pivot points breakout, you're expecting price to break a certain resistance level or support level, and then you put.
Is it that you may lose some money in that respect? Is that what it means?
If price disobeys, that's like prediction you're trying to get. If price disobeys that prediction, then you want to cut your losses. You have a stop loss. Okay,
so is that way we can look at examples of pivot points in that regard? What are the examples that you want to show us to explain this further? Okay,
and I said that there are three of them. The third one is to determine market sentiment. Let me just look at market sentiment as fast as possible. Then we'll go to the live market so that we can look at what's happening right now and how the market is reacting to pivot point levels. Now let's look at how pivot point is used to determine market sentiment. What is market sentiment? Market sentiment basically means what do we expect price to do today? Is it going to go up, or is it going to go down, or is it going to range? That's sentiment, basically. So in the same way, it's believed. And if we all believe things at times, it seems to come to pass, sort of. Now, it's believed by a lot of traders that if price should open, because the way the market works is that at 12 o'clock midnight, yesterday closes, and the next second, today opens. So there is a price that yesterday closed, and there's a price that today opened. Now, if the price of today should open above the central pivot point, above, it's believed that the sentiment is going to be up, just like I have it in this current chart. Price open. If you see that, when you have that little gap in between at the beginning of the chart, you see that gap. Yeah, price open for that the next day above the pivot point, and you can see the trend went up throughout that day. So that means the sentiment for that day is an uptrend. It's believed.
You mean nothing can disrupt it?
No. All these things are not cast in stone. But like you give me the example of the dark cloud. Is every time you see a dark cloud that it rains? No, but most of the time you see a dark cloud, it rains. Yeah, that's just a sentiment, basically. And you want to take advantage of the fact that most of the time it happens, then you're fine as a trader. So if you look at the second side of it, this time around, price opened below the pivot point. And if you look at it throughout that day, you see price opened below. If you check the opening, actually it touched the pivot somewhere in between and came back. The pivot point was actually a resistance on that day. But if you look at the sentiment for that day, it was all downwards towards S1, S2, and almost at S3.
Now this is in relation to market sentiment.
So traders can actually use the pivot point for those three things: for range break, for range trading, for breakouts, and also to determine the market sentiment for that day.
Okay. If you look at the live market, to what extent can you describe the use of pivot points in the live market?
No, in the live market, you're going to be implementing these things I just showed you. That's what you're going to do. That's what you're going to do. When you look at the live market, because all these things I showed you are events that already happened. If you look at the live market, I think we can zoom in a little. Let's zoom into this chart a little so we can see some of those
Those red and blue colors there.
Red and blue line. If you look at, we have there's some horizontal lines there.
Okay.
Those horizontal lines separate the different days. If you look at yesterday, you can see those points where we have those like long lines, long black lines above the blue line, above the blue candles and red candles. Those are like resistance levels of yesterday. If you check those levels, they were clear pivot points where price was actually turning back. For a range trader yesterday, we would have made a lot of money, because price was actually jumping at pivot points and coming down, jumping at pivot points and coming down. So basically, if you're a range trader yesterday, you have made a lot of profit using the pivot points. Now, what I've noticed this morning is that at that support for today, it's difficult. The price seems very small. At that support for today, it was actually the midpoint of pivot points. Now, the truth of the matter is that, you know, as you study some of these tools, you get more detailed information about them. Beyond those pivot point levels, you have R1, R2, R3, S1, S2, S3. We also have what we call the midpoints. And it's been discovered that the midpoint also could be very effective levels where price will actually return. So basically, if you check today's graph, you put the pivot points for today, you will discover that at the support for today, the current low for today is actually the midpoint of the support of the between the pivot point and S1 for today's pivot point levels. And if you check the way I mentioned this pivot point, I'm talking of daily pivots. Because what you do with pivot is that you take yesterday's price, the price of yesterday, the high, low, and the close of yesterday, and you use them to calculate the pivot points for today. That means the pivot point for today is a function of what happened yesterday, you know, basically. And that's where traders get the values that they use to get the pivot points for today. So basically, if you check today, price has actually been ranging between the midpoint of a pivot and the other midpoint also between pivot and R and S1. Now, I know that could be, you know, like tough for you to see, you know, basically, but that's what has been happening today.
Okay.
Yeah.
Let's narrow this down to the global market outlook, looking at the impact of the Greece bailout and the effect on the currencies. We saw the euro actually bouncing, even better than the US dollar. Now, how will you react to this?
No, actually, there hasn't been any serious reaction to the. We all know that Greece has been able to sort out, at least to me, I'll say partially, their bailout issue. Basically, because if me and you have a meeting and we agree to do something, we only agree, we've not done it. You understand? So it's still remaining implementation, and people are waiting for implementation even though the deal has been done. So basically, the market has not reacted. If you checked what happened yesterday, the market has just been in the range.
Well, we saw some kind of reactions though in some of the stock market and even the currencies. Gold, for instance, was also affected.
Yeah, gold was
by
affected.
This.
Yeah, but if you check the major currencies like the euro, like the dollar, you know, there hasn't been any.
Because once gold is moving up for whatever reason, it's going to affect dollar.
Yeah,
it's going to move the opposite
gold
direction.
Moving up might just be that a lot of people, you know, are beginning to go back to the gold, which can also be a very good safe haven, you know, for investors. You understand? So that's basically when you see a lot of reactions in gold, when people begin to dump the dollar and begin to buy commodities like gold. And that's what gives strength to gold a lot of times. And when people begin to get confidence back in the dollar, you see that gold begins to fall. Basically, they always have an inverse reaction. If you check S&P 500 throughout yesterday, it was practically flat, you know, which means there was no major reaction to the bailout deal that Greece was able to get
all right. As we wrap up this segment, what are we to expect next week? We expect to see you back on Monday. So what should our viewers expect from you? Yeah, what tool are we going to use this time around to analyze the currency?
You know, if you check our confluence of events, and what we've been trying to do is that we've been trying to give to our viewers tools, very simple tools, but very important tools that they can actually simply implement, you know. And I don't expect that when you watch a program like this, for instance, you just go and start using pivot points. What we expect a lot of our viewers, for instance, who can come for our training, who can come, you know, and meet us physically, is that you go online. You know, there are a lot of, you know, resource online that you can get. For instance, do a Google search for pivot points. You get a lot of materials that can actually teach you more. But what we'll be able to do is to give you a guide, to give you an understanding of what the tool is used for, so that when you read and study, you know, you can stay within like the limit of what the tools is used for, and you can implement them properly. You know, so. Next week also we're going to be building on we've done Fibonacci, we've done pivot points. We're going to be building on that, you know, to one also very important tool that, you know, traders can actually use in the market. But I also
you want to let that out of the bag now?
No, I don't want to do that.
Till Monday?
You know, but I'm also expecting that next week we're going to be looking at more market analysis. So I expect traders to actually watch in. We're going to be looking at what market wants to do, you know, what reactions and they should expect from the market, you know. We won't 100% give you buy or sell signals, but we could give you a lot of market sentiment and information that what price wants to do. And I believe it's going to be very effective for
and
traders.
for those who still want to learn at your place, what do you say to them? For those who want to learn all of this, because this really sounds a little bit technical.
Now, you see, these days I've noticed that we're getting a lot of people coming in for training, which I think is very important at this. It happens a lot of time beginning of the year, because when you beginning of the year, a lot of people set goals and that for the year, and so they they come to implement. But most importantly, my recommendation is that people settle down and get knowledge and education. BSc and a lot of these degrees these days are not as effective as even some seminars you go for. So I recommend no matter your degree, you better just relax, dump it by the side. You come for a 1 week training, and come get the tools that you need to succeed.
Oh, okay.
Yeah.
Well, I want to say that the BSc could be useful even afterwards.
No, I'm not saying it's not useful.
The training. Thank you, Michael. It's been a great time talking to Michael Akinwale. He is one of the analysts from Al Pari.